Hello, Rebel Capitalists. I hope you're well. Nobody tell George Gammon I just did that. Hey, everybody. The Doctor of Florida Real Estate, yours truly, is in, and I have my finger on the pulse of the Miami real estate market. Every week in the comments, it's either one or the other. Everybody and their brother is on there saying, hey, Jared, Miami's never gonna crash, you're a kook. Or the other half is on there saying, hey, Jared, I'm getting crushed here in Miami. I think I'm gonna move to the West. Whatever the case may be, folks, you're gonna get the straight answer here. If you're looking to buy or sell anytime soon in the Miami area, you're gonna know exactly where to find a deal. You're gonna know exactly where the market's overheating. We're going to do a very deep dive here today. But before I do, let me tell you about some very cool things in store for you. I've got a giveaway I'm going to tell you about here in a moment. But secondly, the doctor was in all last week, folks. And if you are interested in finding out what's going on in Daytona Beach, Flagler Beach, Volusia County, Polk County, Lakeland, Orlando, Tampa, all those marketplaces have been covered in the last few days. So a lot of you will jump in the comments after the show and say, Doctor, what is going on in the other marketplace of X? And I would say a lot of that is already done. But I want to tell you about some big updates coming soon. Florida insurance, as everybody knows, it's in the comments as well, every video, is crushing people. Now, we all want to step back. If we look at the news, the headlines right now are Ron DeSantis is going to leave office as a governor, disgraced over not solving this problem. I, for one, did a very big update that I'm going to link here below. If you're curious about what caused the crisis, you can go there and see a quick history of what happened and why it's so epic here in Florida. I'm doing a deep dive update that I actually want to have ready for today, but there's so much going on in this particular topic and a lot of changes to the laws over the past 2 years, but there's so much going on in the news right now on this topic. And so much has changed in the laws affecting roofers and attorneys and contractors and everybody else. I wanted to do this topic justice, but look out, it's coming soon. And don't click out yet. I know you're all frustrated. I haven't started the Miami update, but I need to tell you that the doctor's in this week, and here's some of the planned market updates that I have coming for you. My early focus this week is going to be Naples, Hernando County, Collier County, Bradenton, and the Sarasota markets. And something I have not done very often, I'm going to spotlight two major marketplaces in Texas. But if this is the first you've known that the doctor is in and you're not already following the top channel on the YouTubes for real estate data analysis with a focus on Florida, we're doing other markets as well. Subscribe to the channel and join the movement. But as we dive into today's topic, we are literally going to cover all the major markets from West Palm Beach, Fort Lauderdale, Boca, and the entire Miami market, all the way down to Homestead, Florida. It is a huge slice of Southeast Florida, and it's one of the hottest and sometimes more unaffordable places to buy in the Florida market. We're going to see exactly how it's doing. But this week, I am starting a weekly giveaway game called The Price is Wrong. And on The Price is Wrong today, I'm going to buy you lunch or a week worth of Starbucks. That's right. Whoever is closest to the number without going over will win a $60 gift card to your choice. And I will call this winner on Friday, the following Friday that this video airs. Now, the number we're looking for is this. What is the potential crash volume that this marketplace could see in order to reach its normal average? Over the past 16 years, Miami's cost of housing runs, on average, 5.5 times local earnings. That's right. So Miami has a known local average year after year that the average resident there makes, and real estate there runs approximately 5.5 times of that number. Now it's gone much, much higher, right? Yay, unaffordability. It's way, way higher to buy a house versus what the average Miami resident makes. And in order for that number to come back down to its 16-year average, what percentage does the market have to drop to regain a balance of its running 16-year average? Put another way, potentially, how high or how overheated right now are prices in the Miami market? Drop your comment below. Winner will be picked by this Friday. Yes, I know the doctor's long-winded and you're throwing things at your computer or your phone already, but let's get into Miami news and data right now. All right, folks, first thing I want to share with you is I am reviewing this with you in real time. That means as I am watching the data with you, you are going to see me looking at these zip codes for the first time. I'm going to be seeing things as you see them. You're going to watch my analysis as it really happens. Now, the first thing that we're looking at right now is called home value growth year over year. Right now, Miami, even in what is considered really a flat year throughout a lot of the marketplace, not just in Florida, Miami is running nearly 5% over its last year average. Now, if you zoom back on the state, you can see that it's really the only warm place on the map in terms of appreciation. Now, Tallahassee is running 3.7%, but you can see Tampa is down, Orlando is practically flat, Polk County, Lakeland, all these areas, they're really blue. They're really breaking even towards last year, okay? So Miami is obviously much hotter. You can see Clewiston down here in the middle, but that's nothing to look at. In fact, Clewiston is a middle state south, which I don't know if there's even much real estate there, and it's in the swamp, and poverty is extremely high. So a lot of this is probably driven by the fact that it's the only thing people can afford to get a mortgage on anywhere in the state. Before I really dial in and let each of you see city by city data, I'm gonna look at a couple of my favorite charts for the entire metropolitan area. Now, there's multiple large cities you can see from West Palm, Boynton, Coral Springs, all of them. They're all the way down to Homestead here in the south. This is what's called an MSA. It's a metropolitan statistical area. It's a government acronym for this massive area that gets grouped together for the southeast part of the state. So let's take a look at some of those. Now, this is the buy versus rent calculator. This is the most recent update of seeing just how close we are at getting the home purchase line again down below the rent cost. Now, as you can see over history, this is going back several years, it is historically more expensive to rent in Miami than it is to purchase a home. And that's healthy, right? We want to drive people away from being a renter, and home ownership should be not just an advantage from a monthly payment standpoint, but also the write-offs of interest if you're borrowing on the house and all that kind of thing. But last year, when the interest rates started to climb, the rate and cost of purchasing a home went well over the cost to rent. And that's ultimately what the goal is with raising interest rates. The goal is to slow the economy down. The goal is hopefully to drive down the price of home by raising the cost to borrow against it, depress prices. You people are saying, what? That's why the interest rates are going up? Yes. And is it affecting anything? No, it's not, apparently. Even though our rates are going really, really high, Miami specifically is still 5% over last year. But look at this. You're seeing this number climbing again. Now, the data on my graph I'm showing you here ends in July. One thing I want you to understand is it is, again, leaving the rental market line behind, and it's going to get worse because interest rates are much higher than they were back when this graph data was finished. Now, if you look at the gap here at the end, the average cost to purchase as of July was $3,000. It's $2,700. It's approximately a 10% gap. The information here is not accurate. For some reason, my chart is pulling the data point from March. So March is what you see here in the $2,800 a month. It's now higher than that. It's probably actually higher than $3,000 a month now to buy a home in Miami. The next is a very important chart. Now, I'm going to move pretty fast over this chart, and this is going to be one where most of you, especially if you're looking at buying or selling here, you're going to be curious because this is an aggregate score to show you where the best opportunities are to find a good deal in these marketplaces. Now, the score at the very top, where you have Gould's, for instance, Tequesta, Fisher Island, all these zip codes that are actually at the very top of the list with the highest score, it's an aggregate number based on day on market time. So if the times are climbing there, if inventory is going up there, and if price cuts are pronounced. So all of that makes a blended score, and these are the ones that are most likely to be friendly to home buyers. Obviously, pause the screen because this is the top of the list, and I'm going to drop it to the bottom, and you can see there's quite a swing in terms of the areas that are having the most significant price impacts here at the bottom, okay? So Canal Point, Fontainebleau, Coral Gables, Miami, Doral. So all of these down here are going to be the marketplaces that are most unfavorable for a buyer. Now let's come back to the zip codes on the metro area. We're going to start in the south and move up. You can see what we're looking at right here. These are areas where home value has progressed the most. Now, if you are from the West Palm Beach area or Boynton Beach, Delray, and you're sitting here saying, you know, I'm not seeing the south that hot. Well, that's because your year over year is cold. Like you're flat or dropping. You can see in the south, it's a much hotter dynamic because these are all red because price growth is very good, okay? So we'll start at the very top. I'm not gonna call out each one, but you can kind of see Palm Beach right here. The most you see, particularly on this screen, is maybe 2.8% and 3.3463. You have a few down through the middle. Here's one that's actually up 6.7%. Bigger price point, so this is probably a very good area. You can see really as we pass Boca Raton and Deerfield Beach, notice how positive the chart goes. You go from break even zero numbers to all of a sudden very big appreciation in some of these spots. Look at this. 33313 up 9.5%, 8.8%, 9%. You just obviously, this is the blend of the marketplace. So when you have a market that is actually putting up a big number like Miami is, a 5% price growth, you got a lot that are indexing much higher than that number even. Now what we're looking at here is the for sale inventory growth year over year. So now at first glance on the south end of the graph towards Miami, you see a lot of blue, and that's obviously because there's not a lot of inventory against last year. The other thing too I want you to know is that across Central Florida right now, the numbers, even when you see an area that says red, it can be red and it's only a 27% increase over last year. So for instance, 33418 here in West Palm Beach, or north side of West Palm Beach, that's nothing to write home about. Look at even some of the most red market areas, 40% increase over last year. So that's not a huge jump. And I will tell you that overall, everywhere we look in the state of Florida, the numbers are not getting as high as we saw through the fall of last year. So last year was obviously the fall of 2022. It was up against the previous year, 2021. And these were numbers where, you know, we saw a lot of 150% run up in inventory in certain zip codes, 175, 200%, 300%. So against the previous year, these aren't big numbers. However, if you take a number like this one, okay, so look at the square. It says 135 homes this year, and that's a 40% jump because last year there was just short of 100 listings in the same exact zip code. Folks, you gotta understand, well, when it was 96 last year, that was up from probably 40 or 50 listings the year prior. We're starting to see a bit of a leveling off about where listings are in terms of inventory. I will tell you this too. The more I look at these areas around Florida, I am seeing the areas with low listing counts like these right here. If I were to flip this graph to how many of those areas are mortgaged, you're going to see a very high number of mortgages in some of these blue areas. So a lot of the areas that, you know, that people have those low mortgages, they're just not putting them on the market. You can see the areas around Fort Lauderdale. There are quite a few, right? The whole north side of Fort Lauderdale looks like there's plenty of opportunities where inventory is starting to come up. Right on top of Hollywood, South, Pembroke Pines, obviously ice cold because, you know, prices were going up there. All these areas where you're seeing prices climb, there's just no inventory. Those are, you know, obviously basic market economics. It's responding as it should, okay? So as you see here, those of you that are looking on the south side of Miami going towards Homestead, there is just not a lot of choice, okay? It is ice cold, super tight in terms of available supply. So a lot of these areas are still very, very low. Entire zip codes throughout these areas with 20, 30 homes for sale in the entire area. It's a good sized space with not a lot of properties to actually choose from. Next thing we're going to look at is price cuts. Now, this is usually an exciting opportunity to see if you can find areas in a given marketplace where there might be places for you to put some low offers in. Now, when we look at this map, the areas that are red are starting to see an increase in the number of sellers really kind of jumping on the herd mentality bandwagon and dropping their prices in unison. So these more red areas, you're going to see higher opportunity where you might be able to get a deal. I'm going to kind of give you some ideas and thoughts as we walk through that. And you can see really down here, if you're still looking to buy in Miami, it is going to be tough, folks, because there's not a lot of inventory. Obviously, if there is ever a price reduction, it's only because they are making minor adjustments, probably from just jumping the shark when they first listed the house. They probably went way too high, gave a crazy number, said, hey, there's nothing for anybody else to buy, so maybe I'll give it a shot. Now, the highest zip code in the entire Miami area is 33145. It has got a 1 out of 4 rate of price reduction, okay? So as high as it gets is here. It is absolutely crazy tight. I mean, nobody in the marketplace is actually reducing their price. Same thing here with Hialeah, Pembroke Pines, super ice cold. Hollywood, here we go. So we saw some inventory jumping here. As you can imagine, 1 out of 3 are starting to reduce price. If there's anything you could find to live in there, then that would be an opportunity to write a lower offer. In a second, I'm going to give you an idea of day on market time there to help you with those decisions. Because when you start to see people in these areas like Pompano Beach, north side of Coral Springs or even south, these areas here like in 33486, some of Deerfield Beach, you're going to have opportunities to come in here. And if the sellers are going a bit over the average DOM time, day on market time rather, you'll be able to come in there and there might be some stress. You can come in and make a lower offer. As we get towards Boynton Beach, the top of the market, you're starting to see 32% here, 25%. So essentially all over. I mean, none of this is really crazy, folks. But as you look through these areas, like I don't think we see anything in the upper 30% range in the entire MSA metropolitan area, which is one of the largest in the entire state of Florida. This is crazy, folks. The reality with Miami is super hot. It is absolutely, by and large, the grand champ of a contentious market still. As we head in the fall, this is real-time data, folks. These markets are much, much tighter. This is by far and away the tightest market I've seen. If you go back and look at just by comparison, I did Orlando and Tampa in the past week and a half. It is not hard to find these areas and zip codes in Tampa and Orlando both, where you start to see zip codes where people are panicking and there's nearly 1 out of 2 sellers, entire zip codes, that are hammering the price in order to get the house out. Now, that's even happening in zip codes in those areas with lower supply. So you're seeing situations where there's not a lot to choose from, but those marketplaces, they're still having to drop price in order to get the house gone. Now, let's look at day on market. I'm going to pull this back again, okay? So what we're looking right here is the trend of time to sell, okay? This actually indicates really where the pressure on a seller can come from, right? If a seller is not living in the house, it's vacated, it's on the market, and they need it sold, they cannot wait forever. So if you start to see some of these marketplaces turning red, that becomes a situation of possible stress. Now, I will tell you, a lot of people, let me do this as a metro basis. What is the percentage of mortgage inventory of mortgaged homes? I bet you it's super low for the state. Look at that. Okay, so in this particular area, Miami, as a major market, only 56% of Miamians, in the particular the metro area, because this would include everybody through here. I'll click on this so you can actually see this graph across all the zip codes. It's a very fascinating look. If you look at Orlando, for instance, and Jacksonville is even worse. Orlando has 2 out of 3 homes are actually under a mortgage. Jacksonville, same thing, 65% actually probably has the highest amount of mortgage properties. Banks' money is here more than anywhere else. And obviously that is a problem because if people do get in trouble, if they start borrowing second mortgage loans and all that kind of stuff, they do get up to their neck in problems, okay? Whereas Miami, the interesting thing is it's skyrocketing price year after year after year, like nonstop, without a breath. And it has very low bank money. I'm not saying that that cannot affect the economy. Like if people in the Miami area, you start, you're a cash seller, you don't have a mortgage, but yet the, 2 or 3 homes in your area do, and they have to sell because they can't afford it, it will affect price, okay? The last person to sell really kind of sets value in a given area, right? So it's not all about the guy that sits on the sidelines and because he owns his house, he doesn't have a mortgage. Once someone sells, you're going to have something on record that says that's what the value is. But look at some of these areas. If you're curious, like, where could problems arise? It's anywhere where it's like 62, 63% or higher in mortgage, okay? Take a look. You just have a sprinkling of possibilities here where you have, as much as 73% under mortgage. I think, is that Wellington? No, it looks like north of Wellington there. But you move down, you've got a couple more zip codes here that are actually, I believe, Wellington. Coral Springs has a lot of mortgage real estate here. You move down, Fort Lauderdale's got a fair amount. Notice it gets more dense. Now this is interesting. Pembroke Pines, it's had a lot of activity with mortgages. And there's, still skyrocketing home prices, nothing for sale, very high tension. Remember what I told you earlier too? I said, hey, some of these areas are just locked in tight because there's high mortgages. That's part of the problem, okay? So some of these areas they're just locked. People have very low mortgage rates. They're not going to sell because they have 3%, all this. They might sell if the car payment and the home insurance and all that starts to strangle them, and it has been happening. But if you come down here towards Homestead, look at this. All of its super high mortgage rates. Let's look at how bad that area crashed on the last down cycle. I've got a percentage of crash graph from 07 to 12. You can see the dynamic of how much value was lost in the last down cycle, which is oftentimes considered a possible indicator of the future. Look at these areas in Homestead. They came down in price nearly 70%, like 65% in these areas. Down through the heart, I think this is Hialeah. This is 65%, 60%. South of Pembroke Pines, really just hit 58%. Some of these red areas didn't do too much. They might have been more rural at the time. I do not know. Just reading the graph here. But you go through Fort Lauderdale, look at this, 60%, 65%, 61%. So down through the middle of town there. The outskirts of these did overperform. Boca Raton did overperform most of the rest of the state as well. But you have Delray, you have up here in Lake Worth. You have Lake Worth, West Palm Beach. A lot of this, dropped quite a bit over the last market shift. Let me show you one more interesting graph, folks. This is called sale inventory growth month over month. So this is one of the tightest statistics that you can find to see how a marketplace is shifting in real time, because we're literally measuring how the marketplace did in September versus October. Is market inventory growing? And this is actually the first positive notion for a buyer in the Miami area, because look, you start to see really big month over month bounces in how much inventory is hitting the market. You might actually start to see the buyer reaction of these recent 8% interest rates, where buyers are starting to go a bit in shock, because look at these numbers, 63% bump. There was a previous month inventory of 17 and now it's 27. And again, these are small numbers. So it's amazing through all these zip codes. 19 last month and now it's 26. Hollywood went from 170 to 200 homes on a 1 month shift. So you are starting to see buyers really kind of going into shock and be like, ugh, I'm out. Look at these markets. So these are the ones that are really starting to turn pretty fast, the ones that are more dark red. The last graph I want to look at is called the poverty chart. Now, poverty is a factor of what happens in the future of a marketplace. The more poverty there is in a given area, the likelihood that incomes in those particular areas are a bit lower. So whenever the income threshold is lower, theoretically, those folks in the matter of hard times are going to have a hard time keeping up with interest payments should the economy dive into a deeper recession, which something could happen. So if you look through this, okay, you have West Palm Beach. And again, to give you a barometer of poverty across Florida, poverty really as a balance is around a 12% mark for the state of Florida, okay? I think Miami is around 13% across the entire MSA. But look at West Palm Beach. You got some areas down here. These are the ones to be careful of. 18%, 22% down the middle, okay? Boynton Beach, right through the middle here. Going further south, there's obviously a lot of affluency. We know that in the southeast part of the state. So you see a lot of this is in blue, very low poverty, probably really good levels of income. Deerfield Beach, you're at 17%. Pompano, you've got this zip code right here, 33060, it's 20%, 25%, 20%. And you got more of these areas down the heart of Miami, which again, I don't know how much or how exciting it is to live in any of these areas, but these areas right down the middle are running at 28%. And then further south, Homestead's got an area right here that's 31%. That's it for now, folks. The doctor's read on Miami is the heart is pumping really strong. The cardiovascular is super high. So I'm very concerned as your doctor, Miami, if you guys can actually sustain this level of activity for a much longer period of time. Do you have another marathon in you for 2024? It's obvious that if you are a buyer in Miami, it is somewhat an uphill battle. However, as we did see month over month, we are seeing the early signs that there are some new absorption issues, meaning inventory is coming up and it's not being taken off the market, which is a good sign. So there might be some opportunities, particularly if you go back and watch that piece and start to zoom in on some zip codes there. But we're going to keep an eye on Miami as well. Most likely do an update again here in a month. Now, to help pay the bills, if you are buying or selling anywhere in Florida, my team has you covered. Not only will you have the best data around, but you're going to get award-winning service through your home purchase or sale. Drop me an email at info@jaredjones.com. That's info@jaredjones.com. If you're an agent and you'd like to join my team and be coached by me direct anywhere in the state of Florida, I am hiring. Reach out to me as well. If you are an investor, home buyer, or home seller anywhere in the state of Florida, I'm happy to give you a free complimentary deep dive on the marketplace that you're looking at, provide you some cutting edge analytics to see exactly what you're up against, and to help you determine if it's really wise to invest there right now. Again, reach out to me at info@jaredjones.com to take advantage of any of those offers. But that's it for this week. Thanks so much for jumping in the comments and telling me where you want me to update next. I love to get your suggestions. And even if you don't have a suggestion, if you appreciate the content, jump down there and just say hello. It'd mean more than you know. Thanks again for watching, and I'll see you on the next one.